Brace yourselves because today we're about to dive into a topic that might just be scarier than any horror film, and it's unfolding in the world of stocks. You may have guessed it, we're talking about AMC, but before we discuss the shocking details, hit the subscribe button and ring the notification bell because you won't want to miss out on these updates. Let's get into it. Welcome back, guys. So the other week, AMC sent shockwaves through the shareholder base by announcing the sale of up to 40 million Class A shares. What is going on?
Yeah, Lacey, they said this was to boost capital strength and shareholder confidence, but right now it seems to be having the opposite effect. There's a ripple of fear going through the market because of dilution. Dilution is something to be afraid of. Remember Mullen? That
How
stock
could we
went
forget Mullen?
from a dime to over $1, back to a dime to over $1, and now it's like 50 cents. People that bought that stock before dilution started happening have lost almost 100% of their shares. I'm not saying that AMC is quite the same story, but dilution is something to be afraid of.
So basically, to me, it's kind of boiling down to be a financial horror movie, kind of unfolding right in front of us. But honestly, what's even more chilling to me is the relentless attraction of traders to AMC. In our recent MarketBeat article, we had reported that last month alone, 3.7 billion worth of AMC stock had exchanged hands. Why are traders so obsessed with it? Cue Mariah Carey here, guys. What's happening?
Well, Lacey, give advice here, investment advice here, but I will say this appears to me to be a situation where it's more important that traders be right than it is that they're trying to make money. And I'm really sure I understand that. AMC's management has really leaned into the whole meme stock thing, and they've kind of taken this us against them mentality. I think they know that the AMC apes are going to be low stock, even if that doesn't necessarily work in their interests. And yet you see something like just what happened with the share offering, and that just gets you scratching your head and saying, I don't know what traders are necessarily seeing here.
So when you say the company leaned into the meme stock movement, what do you mean by that exactly?
Well, as you remember in 2021, there was the short squeeze that sent GameStop and AMC and other stocks to the moon. And I get it. At the process, retail investors got screwed. There's no way to kind of say it. But at the same time, there were shareholders that had an opportunity to get out before the short squeeze went bad. That was kind of like somebody yelling fire in a crowded theater, and instead of trying to get out, you're trying to double down. And I think you've got a lot of people there that are holding a pretty heavy bag, and that's where we are.
Yeah, I think Chris is right. This market's all about fear and greed. It was greed that drove the short squeeze. And now all those traders who are losing out because the share price has imploded are afraid they're going to lose their money. I mean, they just want to make their money back. They don't necessarily want to make a profit. And I don't see that's going to happen. Stock is not going to go back to its old highs.
No.
Well, honestly, this is all so interesting to me. Really, it is. There was some chatter among our content team the other day, and someone had mentioned that the AMC following is similar to the whole Taylor Swift fandom. And I thought that was a good comparison. I mean, I totally see that. Okay, but what is next for AMC? Is there hope, or are we kind of in for more financial frights with this?
So the way I see it, Lacey, is the company is they're trying to position themselves to their investors in a way of saying that the theater renaissance is right around the corner. That's the way they made money in the past. I don't know if that's a profitable strategy for them going forward. The long-term trends are working against them. There'll always be blockbuster movies. We saw the whole thing with the Barbenheimer phenomenon and Top Gun earlier this year and other movies. And I mean, look, I like going to the theater. I went to see Oppenheimer opening weekend. It was a great experience. Nothing like it, but it's not cheap anymore.
It's not cheap.
And part of the reason of that is working against AMC is there's a lot of investment that made into the movie theaters. I mean, it'd been a little bit since I had been to the theater before I went to see Oppenheimer. And it's a luxury experience. I mean, you've got the theater, the captain's chairs, you're getting food delivered to you, ordered on the app, and all of that is priced into the tickets, it's priced into the concession. And I think losing a key audience, and that is they're losing the teenagers, the young adults. I know my kids who are a little older, but they won't pretty theater unless my dad's paying for it.
Yeah, that's exactly right.
You know, and they're losing that key audience. I mean, when I was a teenager, a young adult, hey, the movies were relatively inexpensive form of entertainment. It's sort of like the idea of the malls used to be the hangout, and the movies used to be an inexpensive form of entertainment. And now it's just
You'd go every week. You'd go every week. I haven't been in years, you know? So,
and plus a lot of people, they renovated their homes during the 2020 and 2021. And, you know, a home theater was one of the primary renovations that was going on. And if you've sunk that kind of money into your home, you're going to make every opportunity to use that home theater. Sorry, you are.
Well, I'll be honest. One of the reasons I go to the movie theater is for the popcorn. But now you can, I mean, people are getting smart. You can get the popcorn, head back home and watch your free movie at home. But all right. One last thing I want to quickly cover here is what is happening behind the scenes as institutional interest fades.
Yeah, I don't see a lot of good going on behind the scenes. The institutions bought in Q3, but they had been selling for many quarters before that. They only own 30% of the stock anyway. And that's not much of a tailwind for the market. I think that whatever institutions are buying right now are just bottom fishing. Insider activity is worse. They've only been selling the stock. No one's buying. That's mostly Antara Capital, who's a major insider, but still selling. And then the chart. The chart could be at a bottom. It recently hit a new low. It was a big spike in volume with that new low, but the market is stabilizing back at the 2019 levels, while below 2009 levels. There's not a great outlook for a boost in business in the future. I just don't see this stock rebounding very much from here.
Chris, you have any comments to add to that?
Yeah, just to go along with what Thomas said. If you just look at the top line, you can kind of say, okay, there's some consistency, which you would expect because things couldn't have gotten much worse than 2020 and 2021. So you would expect to see some consistency there. But when you look at the earnings, it's a mess.
Right.
I mean, and I just don't see that getting any better.
Yeah.
Especially when you're, like I said, you're having to spend more to get your customers to come to your theater.
All right. Well, it seems that the scariest tales are often written based on the stock market, guys. But we are going to be following this stock and many more stocks right here at MarketBeat. So go ahead and check out our free resources for further analysis. Don't forget to subscribe, like this video, share it with fellow investors, leave your comments down below. We want to hear from you. Thanks so much for joining me, guys. We'll talk soon.